Hi, this is Richard Campo from Broadest Capital Partners. I'm putting this video together to talk through the role that income protection plays when you're looking to take out a mortgage. So in this video, I'll talk through three main topics. Firstly, it's going to be what is income protection. Secondly, why do you need the cover? And then thirdly, what type of cover and amount should you be looking at? So the reason why we think this is so important is because this sits in with our core values as a business, which is to work from our clients from the moment they get in contact to the moment they're mortgage free. Now, in an ideal scenario, that would be a case of we'll work with you every 3 years, potentially remortgage or restructure the loan until you're completely mortgage free. But I've done this long enough to know, unfortunately, life gets in the way. And mortgages by their very nature are a very long-term commitment. So for some people, it could be 20, 30 or even 40 years from the start of the loan until it's repaid. Now, if you were to lose your income through that period, it really puts you in a very difficult position. Interestingly, Legal & General, who are one of the largest insurers in the world, did some research that most UK families would only last 24 days before their income completely stops, because there's very little savings around. So this is why income protection is so important, because it plugs that gap. And that takes me nicely to the first point, which is what is income protection? Now, firstly, it does exactly what it says on the tin. If you can't work, you get a replacement income until you return back to work. So if a doctor signs a note that says you can't work for whatever reason, this cover will then start working. So this covers any medical condition you can think of, and it's the only cover to cover two really important things. The first is what we call musculoskeletal issues. So this is major sort of accidents, this type of thing. So particularly if you're active, you might sort of think, well, I'm not likely to get sick. Okay, great. I mean, I'll go through some statistics here in a minute, but particularly if you are active, it can cover this. A very famous example is Michael Schumacher with his very unfortunate skiing accident. Now, obviously, he's a multi-millionaire, so that's fine for him, but if it were you, could you be off work for that period of time? It is that sort of situation. And secondly, it's the only one to cover mental health issues. So again, go back to that definition. If a doctor says you can't do your job, the clock starts and the replacement income will come. So that's why it's just so important. It's the broadest type of cover that we offer. This is often our go-to starting point. If someone says, well, actually, I'm not sure what's the most important thing to do, this is it. Because with no income, there's no life. And we'll touch on some points around that shortly. It is linked to your income by their very nature, so there are some caps around it. You can typically cover about sort of 50 to 60% of your gross annual salary. The more you earn, the less the cover goes to, for the reason being is you don't have to factor in tax. So if you don't factor in tax, about 50% of your gross pay works out to be about 75% of your net for most people. So that's why it works quite well. And also you can't be better off while you're claiming them before. It's obviously not a huge incentive to get back to work. So that's what it does by definition. Now, second point then is why you might need cover. Now, I've made the point already. If there's no income, there's no life. It really is that simple. Now, you may be in a very fortunate position. You may have huge savings or family that could help you, but many people aren't. So if you aren't in a situation where you're completely financially stable, just play a little experiment with me for a moment. Just imagine your income stops. And now imagine your sick pay now stops. And you've now gone through all of your savings, or your family have gone as far as they can helping you. What happens next? Which direct debits do you stop paying? Does the car go back? Do you have to take your kids out of school? Where do you start borrowing money from? What changes do you have to make to your life? How quickly your debt's getting built up? So you don't have to go very far to realise quite how bad life could be really quickly within a few months. But it doesn't have to be that way. That's why we think this is really important, because you don't have to be in that position, or maybe you don't have to rely on family, or maybe you don't have to make some bad decisions. That surely has to be a good thing. What's also really important as well is most insurers cover rehabilitation services. So that might be, as I mentioned, physiotherapy, mental health, any sort of thing around that really. They'll help you get you back on your feet. Now, there's two ways you can view that. You can view it cynically, like, yeah, of course they want to sort of stop claiming, stop paying out money, possibly. Or maybe do you want to view it positively, that they've got a vested interest in getting you back on your feet. I know that if something bad happened to me, I'd want someone with a vested interest of me getting better to be on my side. That's certainly where I want to be, on that side of it. So that takes me then to the third point around what type of cover and how much you should get. So as mentioned, it's sort of linked to your income, so that's the starting point. So we'll look at what your annual salary is, then we'll look at things like your fixed outgoings, your mortgage, any other outgoings you have, and that sort of normally figures out sort of how much cover that we need. So what you need to think about is, one, how much do you need? 2, how long do you need it for? And probably the two key cut-offs are either the mortgage or retirement day. So which one of those 2 dates are more important to you, when the mortgage ends or when you hit retirement? Because even though the mortgage is paid, you might still need income right up to this point of retirement as well. Thirdly, how long do you need the cover before it kicks in? So there's something called a deferred period. So that's what I mentioned about sick pay and savings. How long does your sick pay at work go for, and how much savings do you have? So once you sort of factored in as much as that as you need to, that's when this should kick in, so you don't have to make those horrible decisions that went through before. Fourth point, quite a technical one, which I don't want to get hung up on too much now, but do you need to index the cover? Inflation will always be a factor. So do you want to link that to inflation, a set amount? Because let's say, for example, £3,000 worth of cover today isn't £3,000 in 10 years' time. So that's something you might want to think about, so that make sure the money holds its real value over time. So there's some of the sort of the technical considerations. Ultimately the way I think about it is we're the advisor here. We're just here to show you how things work so you can make an informed decision. It might be that you have this cover through work, which is brilliant. You don't need it in that case, then absolutely fine. It might be that your family are very wealthy and willing to help you. Great. It might be you have your own savings. But if you don't fall into one of those boxes, to be blunt, you need this. We would never want any of our clients to be in a really bad financial position because we didn't talk this through with them. So ultimately, your decision, your choice, you're an adult. As I say, our role is here just to open your eyes as to what the situation is, how we can offer some solutions, because for a very modest sum each month, we think this is completely worth it. So if you'd like to talk about this in more detail, please contact anyone on the team. We'd love to talk to you and see how you could benefit from this.